Hello everyone. In this video, we are going to discuss about SEBI's meeting outcome and why it's negative for banks. And in addition, our regular pre-market report video for today, 1st October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, just a bit of recap. As most of us know, yesterday's Indian market was disastrous. Nifty fell about 350 points and Bank Nifty fell about 850 points. Regarding the reason, there were three and all three of them to some extent contributed the yesterday's loss. In that, two of them we already discussed in the last video, but I didn't expect its impact this severe. Anyway, the first and foremost one, yesterday, Friday's Japanese defense minister became the party leader during the weekend, which itself kind of sparked the concerns in the market as he was always very much critical about the Bank of Japan's past aggressive monetary easing. Hence, during weekend, Yen increased by 2%. On top of that, yesterday he became the Prime Minister. In addition to becoming the Prime Minister, he snapped for the new general election which was due next year. In response to all, Japanese index had a sell-off and fell near 5%. So as usual, I don't know how much Japan invested in India, but I have been closely following the market in the last 2.5 years. Whenever Japan sneezes there, always India catches cold. Anyway, now Japanese election is scheduled to take place on October 27th, 2024. Hence, for the next 27 days, Japan is going to keep on sneezing very often. So that's the first negative. Next, second, again this also we discussed. During weekend, Chinese central bank announced more stimulus package, like they asked their banks to reduce the mortgage related interest rate to at least around 50 basis points, which is really good, especially for the Indian metal stocks. So yesterday in Indian market, out of 13 major sectors, metal sector alone increased around 1.3%, all others closed negative. Here, though this is positive for metals, possibly this drained and will drain the foreign money from Indian expensive stocks and move it to possible cheaper Chinese stocks. Maybe that's the reason yesterday in the cash market, FII net sold for 9,800 crore rupees. Even on the derivative market also, the net sold it for together 23,750 crore rupees. That's the second negative. Third, everyone already knows about it. Market had the profit booking since they anticipated negative news from yesterday's SEBI meeting, which they did actually, and we'll discuss in a moment. So those three negative info, I guess all together crashed the Indian market yesterday. Now coming to SEBI's meeting, as retail traders were very nervous and afraid, SEBI haven't changed any related to option trading, like increasing the expiry day trade margin or increasing the option lot size. Nothing. They haven't touched any in this meeting. Probably they might do in the next meeting, which is kind of relief to the option traders who is making money. However, on the negative side, SEBI relaxed the mutual fund regulation by introducing the mutual fund light framework. In this way, the earlier asset management companies can able to separate their passive funds into a new mutual fund, or even the new player with a profitability track record and with required net worth can start the new mutual fund or ETF. Here, you might ask why this is negative for banks. Regarding the reason, already Indian banks are worrying that they are not getting enough deposit as most of the young employee just investing their money into the stock market. Now this new relaxed, more passive mutual fund might accelerate the more savings deposit move from banks to the stock market. So clearly, this relaxation move is very much negative for banks. In addition to that, yesterday in the aftermarket hours at 5 p.m., RBI released the Credit Information Review Report. If required, please pause and have a look. Overall, a year ago, banks' credit grown by 19.7%. That now dropped to 13.6%. The drop in credit growth mainly comes from loan to NBFC and from the credit card segment. Here, the credit card segment is the important one because the margin benefits to the banks is very huge. On the contrary, loan to the industry increased to 9.7% from 5.9% a year ago. Overall, this report is very bad for banks, but according to some extent, all those already factored in the past quarterly results, so no new info. But either way, because of this credit review report or due to the mutual fund rules relaxation, last night both banks ADR further dropped by another additional 2.5%. And also both banks ADR got the 1.7% more negative arbitrage. So we can expect more negative banking stock openings today. Here, I sincerely hope to be wrong, since yesterday, just 5 minutes before the market closing, I sold 52,800 put options and hedged it by buying the 51,500. So today, if this bank ADR negativity materialized in the bank Nifty means, then it's disastrous for me. Hence, hopefully, I'm wrong. On the positive side, IT ADRs were not that negative. Infosys was mild negative and Wipro closed mild positive. Again, for some reason, all those was not reflecting in the GIFT Nifty. Early morning, it closed at 25,985. Equating it with the spot market, it's indicating flat to positive opening. Then regarding US market, last night in Business Economic Conference, Fed chairman spoke dovishly like over the time they expect to bring the monetary policy to neutral stance. And Atlanta Fed President signaled another 50 basis point rate cut, which in turn made the US market to close positive. So Dow Jones closed near flat, S&P funded up by 0.42% and Nasdaq increased 0.36%. In case of VIX, not much, it dropped 1%. As a summary, global momentum is mixed. Japanese market is not good. On the contrary, US market is good. However, GIFT Nifty is indicating the flat to positive opening. On the conscious note, banks ADR were significantly negative. And in addition, yesterday RBI warned the gold loan companies for malpractice and also warned the small finance banks and NBFC companies. So those sectors will be on focus. Then as per stock open interest, Hindustan Copper, Reliance, RBL Bank, SBI, Bandhan Bank, Tech Mahindra and Ashok Leyland got an increased open interest along with a negative close indicates the short build up. On the other hand, Britannia, BPCL, ACC, IDFC First Bank and AU Small Finance Bank got an increased open interest with a positive price close, which means these stocks got the long build up. Regarding the things to look out, today Chinese and Hong Kong market will be on holiday. Then about macro, first at 10:30 am Indian manufacturing PMI data is due. Then at 2:30 pm Europe's consumer inflation data is scheduled release. And in the night, US number of available job openings and manufacturing PMI data are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 120 points gap down and it slides throughout the session and closed below the previous support zone 25,850. Thus on the daily chart, Nifty found a long bearish candlestick pattern indicating a bearish reversal pattern. This decline was accompanied by the higher high negation which formed for the previous 8 consecutive sessions. In addition, Nifty fell below both the 5-day and 10-day exponential moving average with above average volume, and there was a significant negative divergence in the RSI indicator, which all now indicating potential further weakness. Hence, the sentiment is weak in the near term with support at 25,750. A break below 25,750 could lead to further correction. On the higher side, resistance is at 26,000. In case of Bank Nifty, in line with Nifty, it also opened 280 points gap down and closed at below 53,000. Thus, on the daily chart, it formed a long bearish candlestick pattern and continued its lower high lower low formation for second session. Hence, as long as Bank Nifty holds below 53,350 zone, we could see the weakness towards the 52,750 and 52,500 level, while on the upside, resistance is at 53,350 and 53,500 level. According to weekly options data, the maximum call option open interest was at 26,000 strike, followed by 27,000 and 26,200, with maximum new call option writing at 26,000 strike, followed by 26,100 and 25,900. On the put side, the maximum open interest was at 25,000 strike, followed by 26,000 and 25,800, with maximum new put option writing at 25,800 strike, followed by 25,600 and 25,700. Thus, from options data, it indicates that immediate support might be at 25,800 to 25,600 for Nifty, while 26,000 might act as the resistance. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.